Welcome to The Explainer. Today, we're digging into something that's totally flipping the business world on its head. ESG. Environmental, social, and governance. We're going to see how it's gone from this fluffy thing you stick in a report to a hard-nosed factor that can literally make or break a company's finances.
All right, let's just jump right in with this quote because it really hits the nail on the head. For the longest time, ESG was, it was seen as something separate from the real business, the business of making money. Well, that whole era, it's over. Done.
So, here's our game plan. First up, we're going to ask the big question. Why is all this happening right now? Then we'll get into the nitty-gritty of how you translate these big ideas into cold, hard cash. After that, we'll see how it's shaking up everything. Everything, from spreadsheets to the factory floor. We'll even look at how it changes what a company is actually worth. And stick around for the end, because we're going to talk about a future where ESG might just become invisible.
Okay, first things first. Let's really get into why ESG isn't just some corporate buzzword anymore. It's not just a box you have to check. It has become a fundamental business reality.
Let's just be really direct about this. The old way? It's toast. For decades, sustainability was something you'd find tucked away in a pretty, glossy report, probably put together by the marketing department. But today, totally different story. Now, it's a hard number. It's a direct input into financial performance, a real factor that can actually sink a company or make it soar.
So why the big change? Well, what's so fascinating is that the pressure is coming from everywhere. This isn't just one group pushing for change. We're talking about a full-on systemic shift. You've got investors pricing climate change as a real financial risk. Regulators are demanding disclosures you can actually audit. Lenders, banks, are literally tying interest rates to how well you manage emissions. And even us, the customers, we're looking at the carbon footprint of what we buy. It's coming from all sides. Okay, so if you're a company and you've got all this pressure coming at you, what do? Well, the most important first step is to start speaking the right language. And in the world of finance, that language is, and always has been, dollars and cents. And this really gets to the heart of the new way of thinking. True integration, it's not about filling out forms or doing more paperwork for compliance. No way. It's about a fundamental shift in seeing that things like, say, reducing your emissions or improving worker safety, they aren't just nice things to do. They are direct drivers of cash flow, they reduce your risk, and they give you a genuine leg up on the competition.
And this is a perfect way to see how it works in the real world. We're finally connecting the dots. Being more energy efficient, that's not just a green thing. It literally lowers your operating costs. Having a great reputation for being an ethical company, that's not just nice. It makes your revenue stronger because people trust you and want to buy from you. Every single one of these things maps directly to the P&L.
Okay, so speaking the language is one thing, but now let's look at how the really savvy companies are taking this from theory to practice, how they're baking it right into their daily operations and planning. This is about changing the fundamental DNA of how a business even forecasts its own future. The financial models themselves are being rewritten to ask totally new questions. Questions like, what happens to our sales as more and more people want ethical products? Or how much money do we save on hiring if we invest in our employees' well-being? Suddenly, ESG isn't a report on what you did last year. It becomes a powerful tool for predicting what's going to happen next. Now, to actually make this happen, the whole internal machinery of the company has to change. You can't have the CFO and the ESG team just emailing each other a PDF once a year. They have to be working together constantly. And that means you need better data, you need metrics that everyone agrees on, and, this is the big one, you have to link bonuses and incentives to these ESG metrics. Because when it starts affecting your paycheck, that's when it gets really real. And at the end of the day, all this hard work, it funnels down to one of the most important numbers for any company on the planet, its valuation. What is this company actually worth? So let's do a quick Finance 101 here. A really common way to figure out a company's value is to look at its expected future cash flows. And what's wild is that ESG messes with all three of the main ingredients in that recipe. How risky those future profits are, how long you can expect the company to keep growing, and what its value will be way down the line. And this just lays it out so clearly. There are two paths opening up. On one side, you have companies that are ignoring all this. They're seen as riskier, it costs them more to borrow money, and investors think their growth is going to fizzle out sooner. But on the other side, you have the companies that are ready for this transition. They're getting rewarded with cheaper loans, investors believe they can grow for longer, and that makes them, bottom line, a much more valuable business.
And really, this is the most important thing to get. A company that's good at ESG, that's not about some ideological statement. It's about building a business that's tough, that's resilient, that can handle whatever the future throws at it. It's about pure economic durability. So, where does this all end up? Let's take a look at the future of finance and what the ultimate goal of all this integration really is. And I think the answer might actually surprise you. The endgame here is a world where ESG is so baked into every single financial decision that we don't even talk about it anymore. It just becomes invisible. I mean, think about it. 20 years ago, companies had a cybersecurity budget. Do they have that now? Not really. It's just part of the cost of doing business, part of risk management. And that's exactly what's going to happen with ESG. It'll just be normal. And so we're left with this one big question, really. Do you see all this as just another compliance cost? A burden? Or do you see it as the fundamental driver of value for the future? Because the companies that see this shift not as a chore, but as a massive opportunity to innovate, well, those are going to be the winners in this new economic era. It really is a choice between just managing a cost or building the future.